Hello, everybody, and welcome to the Open eCry market commentary for the week of July 16th. My name is Toby Gennaro from Trade with Precision, and I'll just be talking to you a little bit here about the outlook for the markets this week and the next roughly 3 to 5 days, and we'll take a look at some of the equities, commodities, and currencies. And just getting started off here on the S&P 500, we're looking at the futures markets here. And have some of the higher time frames up. We've been looking at this monthly chart where we've kind of been getting our directional cue here for the last number of weeks. And we just got, as you recall, at the close of the month of June, we got that nice bullish candle there in and amongst that buy zone of the 10 and 20 period moving average. Got a break of that high. And then, as you can see on the weekly chart, we've been trending up with a series of nice candles here. Had an indecisive candle right there before last week, and then got that pullback. And then basically just got another nice bullish candle there looking to move higher. As we go down to the daily chart, we have this level in here right around 1355 that has been support and has now turned into resistance. So we got a break of that on the last move up, got a pullback below it, and it looks like we're going to be moving up to break through that 1355 level again and potentially get back to 1375 and beyond. So it's been kind of a scrappy, volatile trend overall. Not real consistent price action with pullback structures, but nevertheless, it is an uptrend. We have higher highs, consistent higher lows across the board on this trend. So it certainly is tradable. On this most recent pullback, we got a nice bullish candle there on Thursday of last week. Then I got a break of that candle and made a nice move on Friday. And then we're looking here to, again, push higher back up into that 1375 level and beyond. Not that it's all going to happen this week, but just keep an eye out on some of these lower time frames as we go down to the intermediate levels around the 120, the 60-minute charts, the 240. You'll have the moving averages in alignment, at least the 10, the 20, and the 50 getting into alignment and then starting to push higher. So once if price action starts continue to push higher and break this level here at 1353, we'll start to see everything fanning out on everything pretty much lower than the 120-minute time frame. So you can start to look for those flat level breaks. We had one right here that was very nice on Friday. Could have been looking. It took quite a number of hours to set up, as you can see, and great payoff there on the break. So keep an eye out for the momentum breakouts on these trends, and then also look for those trend flow pullbacks and those setup candles in and around that buy zone. Let's go ahead and take a look at the Russell 2000. Give us a view into some of the small caps and what's going on. And the Russell, very similar. That bullish candle here on the monthly chart. Things are still moving up. We've got that 780 level that we've been looking at for quite some time. And again, just put in another bullish candle here on the weekly chart and overall trending action there on a number of candles. The one that we were most interested in is right down here on the daily chart, that 780 level that's been support for quite a while, turned into resistance. And finally we broke through that, and now we're coming back, and this has actually been the first retest, which was just a couple days ago, last week. So we punched through that just a little bit down to that 775 level, took off right out of there, gave us a nice bullish candle in the buy zone. And now we broke the high of that candle on Friday, and now it looks like we're going to be moving higher, potentially back up to that 820 or even that 850 level. So not sure how long that's going to take, but that would essentially be the direction. So again, same thing as on the S&P. Take a look at some of these intermediate time frames down there around the 240, the 120, the 60-minute charts, and start to look for those flat level setups. Again, we had one right here last week. That set up pretty nicely and got that breakthrough, very similar to the S&P chart. So keep an eye out. There's some nice trends developing here, even though it's the middle of the summer and volume's a bit low. There's still some trends here that we can catch a hold of to find some good opportunities. And taking a look at crude oil here, it's been in on the monthly time frame. It's been in quite a range here for quite some time. But on some of the lower time frames, getting down even around the weekly, the daily, there have been some good trends, to the downside, as well as even on some of the more intermediate time frames, some trends to the upside on some of these bounces. So what I'm looking at right here is just this level right down here around 77. We hit that last week, got a nice bounce off of that, and set up a pretty nice rejection candle right there off that level. And we just got a break of that high, so I'd be looking for a move kind of right back at least into those moving averages, maybe right around that 97 level. And then to see what might happen there as we move down to some of the lower time frames. There are a couple of touches here right on the daily chart that's setting up a flat level. So as we go down, we can start to see some touches here on the 480, the 240, the 120, and as you go down to like the 120 and the 60, all of a sudden you start to have some trends developing here with some moving averages fanning out up into this flat level. So keep an eye on. It's not an optimal setup, but it's more of just a range trade, and we're trying to look at some intermediate time frames to see if there is a trade setup that we can get going long back up pretty much into this level, like right around here, say 92, maybe 92, 93, and then see if there's some kind of a consolidation there. We're obviously going to be right back into the sell zone on the weekly chart. So a little bit of a counter trend trade here, but it looks like it might be doable. Just looking at the overall range, I mean, this goes all the way back to this 70 level, goes all the way back to 2009. So we're pretty much down at the lows here and just looking for a move back up to the center of this range or potentially back up to the top. But there should be an opportunity there to get at least a 1-to-1, if not more. So take a look at crude oil, see what you think about that one, and look for that flat level setting up on some of the lower time frames, the 120 and the 60, to see if that can set up a little better and potentially get a consolidation there with some small candles pushing up against that 87 level to move higher. So a couple trade ideas there on the U.S. indices and crude oil. We do thank you for watching the Open eCry market commentary for the week of July 16th, and we look forward to speaking to you next week again on the market update.